Alright, folks, Tesla is making headlines again, but not for the right reasons. Investors are worried. The stock is down over 26% from recent highs. And there's growing concern about Elon Musk's involvement in politics. So today, we're going to break down what's really happening with Tesla, the key risks, and whether this is a buying opportunity or a warning sign. Tesla's stock is struggling. Here's why. Let's start with the obvious. Tesla has been underperforming compared to the rest of the big tech companies. While companies like Nvidia and Meta continue to post strong earnings and solid growth, Tesla is facing a wave of negative sentiment. And it's not just about the market, it's about fundamentals, investor confidence, and, of course, Elon Musk himself. First off, let's talk about the numbers. Tesla's latest earnings report showed slowing growth, weaker margins, and declining deliveries. While other big tech firms are posting double-digit revenue growth, Tesla's revenue growth is in the single digits, which is simply not enough for a stock that has historically traded at a premium valuation. Second, the macro environment. We're seeing a shift in sentiment toward electric vehicles. The industry is facing stronger competition, declining demand, and regulatory uncertainty. On top of that, the market is pricing in higher interest rates for longer, which makes high-growth stocks like Tesla less attractive. Musk's political involvement a growing risk? Now, here's where things get really interesting. Elon Musk has been heavily involved in government affairs and political commentary. He's leading initiatives to expose government inefficiencies, challenging spending policies, and even influencing key economic decisions. For some investors, this is a major red flag. Why? Because when a CEO of a publicly traded company becomes too involved in politics, it creates uncertainty. Investors don't like uncertainty, and right now, it's adding another layer of risk to Tesla. It's also impacting Tesla's brand. There are reports that Tesla's reputation is declining in some key markets, with customers in places like Europe and Canada showing increased resistance to the brand. Political affiliations can be polarizing, and in a competitive EV market, that's the last thing Tesla needs. Where does Tesla go from here? So, the big question is Tesla stock a buy, or is this the start of a bigger decline? Here's what we know. One, short-term pain is likely to continue, with sales slowing, margins under pressure, and increased macroeconomic uncertainty. The stock could see further downside before finding a bottom. 2, Tesla's long-term vision is still intact. The company is making major moves in AI, robotics, and autonomous driving, and those could be massive revenue drivers in the future. But the timeline is uncertain, and investors are growing impatient. 3, June will be a critical month. Tesla's upcoming Robotaxi announcement and the launch of a lower-cost EV model could be major catalysts. If the company delivers on expectations, we could see sentiment shift in a big way. Final thoughts: buy, hold, or sell? Here's my take. If you're a short-term trader, Tesla might still be in for a rough ride. There's just too much volatility, and the market isn't favoring stocks with uncertain fundamentals. But if you're a long-term investor, this could be an opportunity. If you believe in Tesla's vision and can stomach the volatility, buying during downturns has historically paid off. That said, this is not a stock for the faint of heart. If you can't handle 40 to 50% drawdowns, you might be better off looking elsewhere. As always, do your own research, stay informed, and make decisions based on the data, not the hype. Let me know your thoughts in the comments. Is this a buying opportunity, or is Tesla in real trouble? I'll see you in the next one. Stay smart, stay invested.